What do you think fundamentally the centralized exchanges or just exchanges in general are getting wrong still today?
One thing exchanges should be doing is focusing on building out and offering these products to sort of even the frontier markets that may not see as highly profitable today.
What have you seen as like the main driver that wins users as a centralized exchange?
You can argue that fees and rates and so on and so forth are very key in that decision-making process, but ultimately it still comes down to the core and the most important element, which is trust.
What is something that you personally see happening that you think the majority of the industry just doesn't know?
I can certainly see your sort of digital online reputation and how you access credit products and such. I think that's going to be very important.
Hi everyone, I'm Sebastien Marque, VP of Strategy at Lunar PR, and today I am joined by Nenter Chow for this episode of Tech It or Leave It. It's an absolute honor.
Thank you. As mentioned, my name is Nenter Chow. I am currently the global CEO for BitMart Exchange, and we've been around for the last 8 years. Prior to that, I was on the venture capital side and also spent about 17 years in TradFi. Very pleased to be here.
Awesome, fantastic. So a couple days ago, you were speaking at ETHCan. You had a keynote, and the topic was about a message for devs, right? If you want to give your thoughts on that and kind of share with us what your main takeaways from that keynote were.
Yeah, sure. So the topic I was asked to speak on was what builders are missing about the current so-called super cycle. And it was really sort of providing a broader, almost advice on how to sort of push forward a lot of projects where they may not be as familiar with go-to-market and distribution in the APAC region, and also advising them to engage earlier with some of the institutional players and other folks in Asia, because increasingly it's becoming a very important piece of the puzzle for success. And I thought, given the fact that ETHCC is very dev-focused, I thought that was sort of the most appropriate topic.
Awesome, fantastic. So my first question is kind of asking you to look back maybe 3-4 years and compare BitMart back then to where it is today. What would be like the single biggest change that the outside world doesn't see, that the users haven't seen, but that has like fundamentally shifted internally for you guys?
Sure. So if it's dating back 3-4 years ago, BitMart, well, to take a step back, I think BitMart at the time during the prior cycle was really known for having the most number of tokens, whether or not it's meme coins, layer ones, layer twos, etc., and very fast at listing. And today it's still true. But I think a lot has changed. For one, we've shifted from playing defense to offense. Over the last few years, BitMart has really been building in stealth mode and building up the war chest and a lot of technical capabilities. And when I was hired about a year ago, was really to lead the effort on the global expansion phase of BitMart. So fast forward to today, we have upgraded our tech significantly. Across the entire platform, we have multiple products, not just spot and derivatives trading, everything from wealth management to credit cards to prediction markets, you name it. And it's very important because the industry has changed. Competition is more fierce. Switching costs are low across exchanges. And you hear this term a lot, whether or not they call it the everything app or universal exchange, etc. But it's true because the game has changed, and exchanges cannot simply rely on taking trading fees and only focusing on that aspect. You need to provide a much broader suite of products and be that financial super app for the user. So in a way, it comes down to more of a focus on AUM versus just trading fees alone. In fact, when you look at trading fees, some exchanges have decided to opt out of that because they understand that's not sort of the key driver anymore. And for us, we understand that as well. In fact, our separate fully regulated US entity, BitMart.us, which is now fully compliant in all 50 states, there's zero trading fees there. And I think it's important, and this is something that's you're going to see exchanges continue to adopt, very similar to what TradFi exchanges had to go through over a decade ago when Robinhood introduced zero fees. Then all of a sudden, you're Charles Schwab's of the world, and everyone else started to follow.
Amazing. I mean, that's a perfect transition into my second question, which was today, because you've been charged with what you just mentioned, which was like the global expansion for BitMart, and you've been at the forefront of this kind of shift towards what you mentioned being like the one super app, or like just having more of like a complete suite. Today, what have you seen as like the main driver that wins users as a centralized exchange? Is it the product suite? Is it the compliance, the trust, the liquidity, the UX in general? Like, what would you say if you had to pinpoint maybe one or two of those? What do you think like really drives adoption at the moment?
I would say the most important comes down to trust, because when you think about an exchange, or even a super app, ultimately it comes down to, do users trust your platform enough where they're willing to shift and put on a good portion of their net worth onto your platform, whether or not it's for trading, whether or not it's for yield products. I would love to get 20% yield somewhere, but I would not move it unless I can trust the platform, the operators behind it, and understand that, okay, these guys are regulated, my money's not going to just disappear. So I think all of those, there's a lot of different, you can argue that fees and rates and so on and so forth are very key in that decision-making process, but ultimately it still comes down to the core and the most important element, which is trust.
You mentioned it over the last year, right? Even within the last year, there's been just so much change in the industry, whether it's like the broader cycle where it feels like we're no longer in a bull run, are we in a bear market? It depends. Like there's so much uncertainty at the moment. Add on to that the whole AI wave and the agentic wave, and kind of like you mentioned that super cycle, right? What does that was more on the dev side, but BitMart as an exchange is going through this phase of the cycle as well. I'm interested in understanding your take on where we are and how are you guys navigating this time?
Sure. So I think what has changed is the fact that retail has matured. And historically, Web3 crypto was largely a retail-driven market. And what's different now is that it's mostly institutional. You attend these conferences and you're seeing more suits, more jackets, more ties. And I think that's a natural evolution of an industry that's starting to mature. The focus for BitMart has really been a combination of both continuing to service our retail client base and also starting to focus on the institutional side, because in order to have this the type of growth that everyone is expecting or hoping to, you really need that larger capital to come in to play. And I think over the last couple of years, as we have seen with the meme coin season and a lot of these very extractive token launchers and so-called market makers, I think there's definitely been a lot of capital that has sort of left the system. And what people are interested in now, I think, is different. Your average retail investor or market participant, they've learned, okay, well, maybe it's not so wise to put 90% of my net worth into a meme coin or an altcoin. They're starting to understand the concept of revenue, of cash flow, and of intrinsic value and such. So, and that's why you're seeing much more interest on the RWA side across a variety of different asset classes, commodities, equities, so on and so forth. And I do believe it's very hard to sort of go backwards once you've learned and understood sort of the entire landscape and what's available. Not to say that there won't be any highly speculative instruments or assets that will perform very well in the future, but I do believe it's much more, it'll be more rare going forward.
The behavior's changed.
Right. And I believe for us, that's why we're very much focused on expanding the RWA side, because ultimately you just want your users to have the optionality to buy what they want, the asset classes they want. It's really about, and what we're doing as well is pushing our financial literacy program, because it's very important to really educate our users so that they don't lose money. They can make the correct decisions on their own.
Amazing. That's super insightful. In terms of, you've touched on so many of the key RWA and the themes that we're all kind of seeing within the industry, and we all have very different vantage points, which is what I love doing these interviews, because from a PR agency, what we're seeing is a reflection usually of the market, but talking to the people that are at the head of the biggest players in the space is always super, super interesting to me. And one of the questions that I like asking, and feel free to dance around it, you don't have to name anything as particular, but what do you think fundamentally the industry or the centralized exchanges or just exchanges in general are getting wrong still today?
That's a very good question. I do believe, so user growth is a very big part of every exchange's goals, including for us. And I do believe that, as I mentioned before, switching costs it continues to become lower and lower, because the time that it takes for one exchange to sort of copy the products of another and another, so on and so forth, it's really reduced dramatically. So the competition tends to be for the same batch of users, right? That's why user acquisition costs continue to increase, and lots of times exchanges rely on utilizing a lot of influencers to help support that growth initiative. I believe that exchanges, I think it's important to increase market share, but it's a very, I would say the total addressable market is very big. And I think it's real. What exchanges should be doing is focusing on expanding and growing that user base across a lot of different geographies. Not necessarily, there are some that are only focused on the ones that are, maybe have the highest sort of return, right, per user. Now, for me, I believe, the fundamental sort of ethos of Web3 crypto, it's very much financially driven. I mean, when you look at Bitcoin, right, originally the goal is to make sure that it's sort of a hedge against the fiat, the current fiat monetary system. And to a certain extent, I believe that it still holds true, and especially for crypto natives. Ultimately, it comes down to providing access to the products that you need. So, and the average user can live sort of in a more financially equitable society where the best opportunities, it's not just for institutions or high net worth, it's for everyone. So when you think now about a lot of frontier markets where, yeah, it may not be profitable today per user, but that doesn't mean in the long term that it's not going to grow. And I really believe one thing exchanges should be doing is focusing on also building out and offering these products to sort of even the frontier markets that may not be as highly profitable today, right? Because it's really about expanding that access and creating sort of a more equitable society.
I love that. So it's like instead of doubling down on convincing the users who have already used other exchanges, et cetera, to come to you, it's also playing your part in increasing the pool.
Right.
Instead of trying to get a bigger slice of that one pie, increase the pie.
Right.
I love that. That's really interesting. My last question is, so when I say we, it's people that are within this industry. We've seen the trends. You go to these conferences, you understand that, okay, RWA, we had a first little wave of it and then it disappeared because it was apartments in Dubai and it was that phase of RWAs. Now with the institutional aspect of things, you understand that 2026, RWA is going to be one of those topics that is going to dominate this portion of the cycle, right? So we see these things and we see the derivatives being added to the exchanges. We've seen exchanges go public in the US, et cetera. What is something that, in your opinion, no one sees coming that will be a reality you can talk about for BitMart or for the industry in general within the next kind of year? What is something that you personally see happening that you think the majority of the industry just doesn't know or doesn't see coming?
That's a good question, and non-RWA related, right?
Anything. Like something that you think that in 1 year when we do this interview again will be a reality that I would be personally shocked by.
Well, I would say maybe not just myself, but because I know there are others that also have this view. But I would say probably maybe on the digital identity side. I think that is something that's been, it continues to be very important, right? And especially when you start thinking about, everything from on-chain credit to sort of, possibly, maybe under collateralized loans in the future and whatnot. I can certainly see, your sort of digital online reputation. Yep. And how you access credit products and such, I think that's going to be very important. I wouldn't say that the market doesn't see it. I think it's just it hasn't been as hot of a topic as, say, the agentic wave right now.
Sure. Amazing. Awesome. Those were the questions that I had. Is there anything that we haven't touched upon that you'd want to discuss?
No, I think, I really appreciated the time today and, always happy to, speak to Luna PR. You guys are great partners. Yeah.
Amazing. Nenter, thank you so much for your time.
No, thank you so much.
Thank you very much. Thank you.